Steve, thank you so much for coming on the Easy Prey podcast today.
My pleasure. Looking forward to it.
Can you give the audience a little bit of background about who you are and what you do?
Sure. So, as mentioned, I'm Steve Lenderman. I'm a certified fraud examiner. I work for a company called Quantexa now, and head of fraud solutions for North America. Prior to Quantexa, 25 years in the financial fraud sector, fintech space, large payroll, large peer-to-peers. And I'm born and raised in Wilmington, Delaware, what I call the credit card capital of the world. So I cut my teeth in the credit card industry for the first 15 years or so of my career. Graduated at the University of Delaware and have been working in the fraud space, mostly in the synthetic fraud space for the last 15 to 20 years. So considered an industry expert on synthetic identity and like to keep current all the current fraud trends that are out there, emerging trends, et cetera. And yeah, I think fraud is fun. Go figure that. Fraud is
So,
fun.
so what got you interested in this space? Was it you got your accounting degree and someone just said, hey, we need your help, or was this a plan?
Yeah, I guess it was sort of a plan. So through the course of college, right, I wanted to be in law enforcement. Ended up looking to be a state trooper for a while, right, and quickly realized that the first few years of my career as a state trooper, I would probably be stationed in a barracks that was, pretty far away and work every nights and weekends. And to put it nicely, I opted to take a little bit of a left-hand turn and got into banking. As I mentioned, like, Wilmington, Delaware is the credit card capital of the world. So I could literally have probably gotten a job anywhere in the banking sector. Ended up in a few places and kind of just stumbled into it from there, right? My younger brother kind of always joked with me, called me the credit card cop. So got sucked into credit card fraud, right? And that sucked me into all this other fun stuff. And here we are 25 years later, still in the fraud business. And, I wouldn't look back on it in any way, shape, or form. I think it's been a great career. And one thing I'm trying to do now is get more people involved in a career path, right? That involves, people think, to go to university, college, they have to go to law enforcement, right? And there's plenty of jobs in cybersecurity that are out there, plenty of jobs in fraud space, financial crimes, AML, human trafficking, right? There's always career opportunities in and around fraud, right? So what I've been doing recently is try to work with, recent graduates and, thinking about getting into fraud, right? I always say there are two things that are never going anywhere: fraud and funerals. Neither one of those two things are going away. Great career path, and it's a lot of fun.
So let's talk about that a little bit before we jump into synthetic identities and whatnot. If someone wants to get into the kind of the counter fraud space, what kind of background should they be looking to build up?
Well, I think a diploma is still not a requirement, but it is highly recommended. Degree in criminal justice is always a background there. Anything in mathematics, anything analytical, I think would be helpful. Obviously, you can work in, a cybercrime degree or cybersecurity degree. Although I would think that's probably a little bit of different career path. Why cyber and fraud are kind of intermingled.
Yeah.
There's kind of a different pathway there, but right now I think there's certainly a career opportunity from that perspective. And I would, like anything, it's mostly street knowledge, right? Webinars, conferences, professional associations, lots of reading, YouTube videos, et cetera, right? There's lots of ways to kind of learn about fraud. And I'll be honest, right? Like my degree is in criminal justice. Would I do it again? Absolutely. This may be a terrible thing to say, but how much of my degree do I use in my day-to-day work the last 20 years as far as fighting fraud? The answer is honestly very, very little, right? Most of the fraud stuff that we learn is you learn from being involved in it, being immersed in it, understanding the fraud patterns, the trends, and just going there, right? That just isn't really teachable in a university setting. It's not that it can't be done, but it's very difficult to do that. So, but the foundation has to be set from a diploma would be, I think, very, very helpful. And then professional associations, like I mentioned earlier, go out and get a certification. These are the ACFE, the IFCI, right? There's the ACAM certification. These are all certifications that touch on our own fraud, which are really more connected to the foundations of fraud, right? How they're committed, why they're committed. Those, I think, really help you advance your career. One thing that I didn't do early enough was obtain some certifications. I thought I was a know-it-all. I don't think I do it. I do know it all, right? But those certifications certainly helped advance my career as well. So worthwhile.
Gotcha. So let's talk for the audience. What is a synthetic identity?
So synthetic identity is kind of a something you really should be scared about, and how it's going to impact the past, present, and future. Here it gets really interesting. We all think of ourselves, we have our own identity. So people will say you have your identity, your identity stolen, right? So what is your identity, right? For some, you have your physical identity, right? That's your eye color, your hair color, your height, your weight, shoe size, things of that nature, right? These are all physical attributes that we convert into a data set, right? So when you look at your driver's license, it tells you those pieces of data, and that's your data, right? That identifies you. But outside of your physical attributes, you have lots of other identifying features that are out there. Most of these synthetic identities are built around a financial aspect of your data, right? And so I think COVID accelerated this quite dramatically, but days of going into branches and walking into a bank are kind of almost over,
Yeah.
right? And even working in the big credit card banks like I worked in before, right? When you obtain your Citibank card at Bank of America, pick your credit card, right? You didn't go typically into a branch. You applied online or applied over the phone or you applied on a piece of paper, God forbid, way back when, and you mailed it in, right? For those of us who are even, let's say, a little more mature, you apply when you're on university campus, right? Somebody suckered you for a credit card, and you got a blanket or a hoodie and an 85% interest rate, right? That kind of fun stuff, right? But it goes back to this idea you're building a financial identity. That's what synthetics have really come around to be, right? It's this concept of using bits and pieces of financial data. So that would be for us, it's obviously our name, it's obviously date of birth, it's our social security number, which was never intended to be a financial identifier, but we've turned it into one, and the SSA can't stand us for that one, but all the banks use it. It's other identifiers as well, like your credit score, right? It's identifiers as address. And we can get really deep into additional identifiers, such as like your device information, right? Your
Yeah.
fingerprint, your age strings, right? You get into 800 different characteristics there. But the concept is this: you're going to essentially create a financial identity out of vaporware, right? Because when you apply to the banks, right, you're applying digitally, and all
Yeah.
are getting fewer pieces of data. Even when you call a call center, they talking to you, right? They're still looking at all your data on the screen. So everything about you is a piece, it's a data set that identifies you. Synthetic identities manipulate those data sets, and I can create this identity from thin air, right? I can create a John Doe. I can create a John Doe date of birth, a John Doe social security number, a John Doe identifiers, right? I can create new device information. I can do all these things, and I basically create this identity financially to use in a financial sector. Like a synthetic identity in the past was really around just again financials.
Yeah.
It's morphed into other nefarious things, which we probably won't get too far into. But it was really the onset they created to basically clean credit, repair credit, and commit fraud. And that's where they kind of came about, and that's what is the big problem for us is that these identifiers are easily created, easily manipulated, and it's kind of a victimless crime because if I steal your identity, Chris, eventually you're going to know, right? Like
Yeah.
you're going to get credit bureau hits, you're going to get freeze alerts, you're going to get collection notices, etc. And you would say Chris Parker is a victim, right? I stole your identity, I used it nefariously. But if I make up a completely unique identity that doesn't exist to anybody, there's no real victim there, right? The victim is the bank. Don't get me
Yeah.
wrong, because the bank is going to be held with a loss, but there's no like actual person, right? Who's there because a person is a ghost, right?
Yeah.
There's nobody there to complain. There's nobody to collect on. These synthetic identities end up being charge-offs and collections, right? And they get written off and go from there. And so that's just the synthetic kind of came about, kind of how it works at a very, very high level, and kind of where they're going. But I want to dive deeper into some of that stuff in a minute, but I'm sure you have another question for me.
Yeah. I guess it's the question of, okay, so if it is I'm going to do air quotes here, the
Yeah.
victimless crime, it's not a consumer victim crime necessarily. It's a business crime. Why should consumers be afraid of it?
Well, because when the banks take the loss, right, we know what happens, right? And when any corporate entity takes a loss, that loss is passed on to the consumer,
Yeah.
right? They're never going to eat that as a loss to them, right? They're going to share that with their entire customer base, and so There's statistics out there that are on synthetic identity that are just, some of these numbers are just astronomical. And because it's underreported, like all fraud in general,
Yeah.
now we have a situation where, again, we really don't know it's fraud because there's nobody reporting that it's fraud, right? You have to go out and identify it, and there isn't someone to say, yeah, that was my identity. It's very difficult to put actual real numbers around this. But I will tell you, some initial reports we've been looking at and working with these banks in the past, anywhere between 10 to 20% of their charge-off losses are probably synthetic identity, right? And so if you look at just the bank's charge-off and take 10% of that, that's just the synthetic identity part of the fraud, right? That does include for all the other fraud they're writing off
Yeah.
too, right? So you take these different elements of fraud, add them all up, right? And then you and I are paying for it, right? We're paying for it in interest rate charges, we're paying for it in service fees, we're paying for it in lots of different ways, right? And so that's why the average consumer should be really concerned about synthetic identities from a financial perspective, because it is costing you in your pocket for sure.
So without a here we go without a consumer victim, let's call it that, because I don't want to say there's no victim, because it's not a victimless
Sure.
crime. Without a consumer victim reporting, hey, my identity was stolen, do the banks have any do they have any incentive in reporting it to anyone? It sounds like they actually, I mean, if I were a bank and it wasn't a consumer that was defrauded, I don't want to tell people.
Yeah, so that's been part of the problem around synthetics as well, is that it's kind of a hybrid fraud, right? It grows and manifests from a credit perspective, right? And so synthetic identity would apply for a credit card, for example, right? And get this credit card, and then they would use the credit card to make purchases, et cetera. Now, depending on like the style of the fraud, whether it's a short game where they just kind of use it, spend it, and then kind of walk away and leave it there for the bank with $5,000 or $10,000 in losses, or whether it's a long-term play where they kind of, over the course of 7 months, maybe 2 years, whatever it is, they're money moving around, and they basically increase their credit limits, et cetera, right? And then you have a huge amount of money that could be left
Yeah.
there hanging. So the hybrid part of the synthetic is that like when it goes bad typically into the credit space. And so, yeah, is it reported? I mean, yes and no. It's reported from a collections perspective,
Yeah.
but it's not really going into, any other kind of fraud reporting. What is happening from a reporting perspective is you're seeing that charge off go against the credit bureau, right?
Yeah.
So the synthetic identity would, just like we all have a credit bureau, they have credit bureaus too, right? And so the identity would charge off, just like a bad debtor would charge off, right, with a low FICO score, a low Vantage score, which wouldn't be used. Obviously, once your credit score goes in the 500s or 400s, you're not getting credit cards anymore. You pretty much burn the identity. So there is some reporting around that perspective, right? But again, the issue comes down to, as you mentioned, there's quote unquote no consumer victim, right? And
Yeah.
so it's very difficult. And one of the biggest challenges we had in the early 2000s around closing synthetic identities accounts was like we knew it was synthetic, but we couldn't close it down because we had no victim, right? We had nobody claiming it was fraud. And so we had, obviously regulatory controls, we had privacy and legal controls around things, so we identify these accounts, and there really was no other way to identify them. You said you had to make up a status, right? Because there are fraud typologies that are established through the banking sectors, right? It's identity theft, it's counterfeit card, it's card not present, it's identity, whatever it might be. Synthetic identity still isn't really considered a fraud typology in most banks.
Mm.
They leave it as a credit loss, right? When it really is going to be a credit loss, but it's kind of a fraud act, right?
Yeah.
Opening an account nefariously to steal funds is fraud, right? But without a fraud claim, they get treated as credit, right? So that's where it gets like it's a catch-22.
There's
like,
a weird compliance nuance to it. We can't we know it's fraud. We can't report it as fraud because the identity didn't report it as fraud, so we can't manage it. Yeah, it's kind of a little circular.
It's really circular, to put it lightly. I mean, it's so circular that there's a magic form that we all have to fill out from a banking perspective, and I'm not allowed to legally say what it is, right? But on that form that all banks are required to use on certain types of fraud over certain dollar amounts, synthetic identity is not on that form, right? Every other fraud you can think of from insurance space to banking to gambling to human trafficking to anti-terrorism. But synthetic identity is not on that form. Synthetic identities tie into all of those types of fraud that are out there. Synthetic identity is not just a financial problem, right? It is a immigration problem. It is a human trafficking problem. It is a credit problem. It is a political problem, right? It is across the entire spectrum. But let's kind of bring it back down, maybe focus on the financial side of things, right? So it's really interesting. It's a hybrid fraud. The banks are much better at it these days, but this is a 20-year problem, right? This is not a new problem. First started working in synthetics when I worked with credit cards. That would have been in 1997, 98. We first started our first synthetics. And no one knew what the hell they were. Just what is this? This doesn't make any sense. Finally, the banks got together about 3 or 4 years later, started some consortiums, started talking about it, right? Because one thing the banks will do really well, listen, is banks will collaborate when it comes around the fraud, right?
Yeah.
It's a non-competitive environment. So we started talking with each other, what are you guys seeing? What are you seeing? What are you seeing? Started bringing the credit bureaus in and things like that. And we eventually formed a working group that I co-chair right now, called the Bust Out Synthetic Identity Working Group, BOSI, that has been working synthetics for almost 20 years now, right? And so it's an interesting space, just because the banks don't know what to do with it quite still yet, right? And it's now permeated into the insurance space, it's permeated into healthcare, right? You have these identities that are financially really, really good and have been aged and seasoned to look like real people, and now you're taking them to industries that don't have a clue what they are in the first place, right? It's a wonderland for them. It's euphoria, right? You've opened Pandora's box in other industries.
Yeah, I was gonna, I was thinking back to, name your favorite crime show, and if it's we're gonna create a backstopped identity for this investigator when they go undercover and blah 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 blah.
Yep.
I kind of, the things that I wonder is when you're talking about aged identities is how are you starting to see identities that have been aged 10, 20 years now?
Yeah, absolutely.
That this person, it's long enough that this person really could be an adult.
So a couple of things have come into play there, right? And so, yes, this has been going on for, like I mentioned, 20 years or so, right? And you do have identities that were created 15, 16, 17 years ago that are still being used. Case in point, listen, I own 3 synthetic identities that I use for research purposes, right? They serve as operational security for me when I'm doing different research. But one of the best ways to really, I guess, to learn about fraud, I hate to say it, is not to commit fraud, but to understand how the fraud itself works. So back in the early 2000s, I decided, hey, this is synthetic. It intrigues me. So I created one, right? And then that one turned into another. So I essentially have an entire synthetic family. I have a husband and wife, both in their mid-40s. And 3 years ago, I spawned a synthetic child who is now 15 years of age. It's been fun to see how that's there. People always ask me why'd you create a child? Well, this one doesn't complain, which is nice, right? It doesn't cost me anything, so that's a plus. But one of the tricks people always said was, well, synthetic identities, when you want to define them or try to catch them, they typically don't have families, right? Which would be nice for some of us, right? Sometimes we don't want our families around either. But synthetic identities typically they're individual things, right? They're connected from a network graphing perspective, right? There's what we call a controlling mind, or minds that manage thousands of synthetic identities, but they're not creating families. They're just creating identities, one-offs, bang, 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 bang. So if you pulled up a synthetic identity in like a LexisNexis or a TLO Clear or some data sort, right, you would see, wait, this person has no relatives at all. Like, how'd this happen, right? Good sign synthetic. So I decided, let's create a synthetic identity child and see what happens. And it's been successful so far. I'm interested to see if I send it to college or not in the next few years. But it would be interesting to see, hypothetically think, do I apply for student loans? right, with the synthetic identity child, right? And take proceeds of those funds, right? Because we used to go to college on campus, right? Now college can be completely hybrid or completely
Yeah.
virtual, right? I can send a synthetic identity to a college, obtain financial assistance, take the classes, graduate, right? And then even go work remotely,
Yeah.
right? And complete synthetic, right? So obviously there's something behind it doing all that. Don't get me wrong, but I mean that's kind of where we're potentially headed from that perspective. It gets really, really interesting.
A virtual identity going to a virtual college and getting a virtual job.
I would tell you this. So my two synthetics that I manage, the husband and wife, both have full-time jobs. Uh, they uh, they receive payroll through a payroll company. We pay taxes. I always pay the government. I don't always take out from the government. You pay in, they don't seem to mind as much as take it out.
Yeah.
So I always pay in. Um, and we go about like life like they're a normal family, right? So it does take work for me, but technology has been really helpful the last couple of years. I can just set up social media posts. I can do different things. I can buy things on Amazon. But right, who doesn't have an Amazon Prime account, right? Even
Yeah.
my synthetics have to have Amazon Prime, right? So it's been interesting to see how that all plays out from that perspective, and it's gotten really easy to do. I hate to say it. That's what scares me now. Really easy to do.
So from a entities that are creating the synthetic IDs, are you seeing more of it being kind of criminal organizations, independent
Yeah,
people? So it's like, I don't know,
yeah,
one organization that's creating tens of thousands, or is it tens of thousands of people creating one or two?
yeah. So we've seen a significant change in the threat actors with synthetic identity. So again, in the early 2000s, it was typically a couple people managing a few identities, right? Maybe 10, 15, 20. If you got somebody with a 50, they were like really, really good at this, right? Because it was a lot of work.
Hmm.
It is a lot of work to create a synthetic identity the old fashioned way, right? Like we used to do it, right? It took me several months to create synthetic identities and get them up and running. Then you get into a little more gang related activities, right? People understood what this was out, and the trade secrets were now being shared on the dark, deep web, right? So now the different groups were working in these things. You started seeing some trans organized crime, particularly Eastern Bloc, right? But nothing government related. It was just the usual hackers and that kind of crew, right? Um, and then I would say the last 2 or 3 years, we've seen a significant change in the threat landscape, going to large scale synthetic identities, 40,000 or so synthetic
Oh,
identities that
wow.
have been created by a particular nation state, right? And they're creating these identities uh, more than likely for some financial gain, right? Because then they could use those to fund their government programs. But they also are using them for political influence, to put it nicely. And so we've seen some actual, nation states now getting involved in creating synthetics, in their target environments, right? But even in their own homelands, right? It's really progressed. The complexity from one or two people managing 10 to 15 to 20 to a larger, like a group, of organized individuals who work globally to create maybe a couple hundred, if not
Hmm.
thousands, to seeing these nation states now who are fully invested in the creating synthetic identities. To put it in perspective, I mentioned when I created my first synthetic, it took me a few weeks, if not months, to do that. Right. Um, last month, using a particular LLM out there, I created a synthetic identity in 7 minutes.
Ooh. So,
So that's the scary part, right? Any idiot can do it now. And I mentioned you had to go in the dark and deep web before to find the trade secrets and be able to figure it out. No, it's on Telegram, it's on Reddit, it's on Instagram. Um, it's everywhere, right? And so when I do these presentations, I always tell people, take out your phone, go on Instagram, and type in credit repair. And every
yeah.
one of those people selling you credit repair is selling you a synthetic identity. Credit repair and a CPN is illegal. It is synthetic identity and it is fraud. So people who get involved in these things, you'll see, I mean, hundreds of them selling CPNs, which is a consumer protection number,
Yeah.
but it's a version of a synthetic identity.
Yeah.
So consumers beware, please.
They, they,
It's
they
fraud.
just they just rebrand it.
Yes, they rebranded. Yep, 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 for sure.
So how is the kind of the financial industry responding to this upscaling and explosion of synthetic identities? It's clearly, when it's been 10% and it takes months or years to build an identity, if it becomes minutes, that 10% suddenly becomes a larger number.
Yeah.
Are there easy ways to identify some patterns in identifying synthetic IDs, or is it a lot more of a significantly more complex issue?
Well, it's more complex, right? But like I mentioned, synthetics are all built around data. And what's the one thing that technology's gotten really good at the last 3 years, right? Through generative AI, right? LLMs, right? Is data and big data management. So the banks are actually the larger banks. Let me paraphrase this, right? Are very well positioned because they love data, right? They have data scientists, they have data architecture teams, they have lots and lots of data, right? And so they're prepared to look at this. And synthetics now, because they are interconnected from a much larger network, they show up in this typical spider chart you see, right? You can see the networks of these synthetics here and there. So the big banks are very well protected. There are lots of vendors out there who provide some services that are very good as well. What concerns me is, like any time, right? When you put your fingers in the hole of the levee, it finds another way out, right?
Yeah.
And so the path least resistance right now isn't really with the mid-size and tier one banks because they're well protected. It's the small to medium regional banks that are really in trouble. The credit unions don't have the resources, right? And they are expanding their customer market outside of their little geographic area.
Yeah.
Now they're taking customers and they're getting themselves exposed. Fintechs, these are again the branchless banks that are out there, right? We'll leave them nameless, but they are a feeding frenzy of synthetics in the fintech space from a financial perspective. And then I did mention earlier, it gets even crazier. Is now the bad guys have figured out, wait, I can use these synthetics in other industries to also gain funds, right?
Mm-hmm.
An example I'll give you is the insurance industry, right? You're like, wait, insurance fraud has always been a problem, but insurance fraud is usually people being deceitful or overestimating, right? About insurance or an injury, right? There's conclusive doctors here and there, but these are all people. Now imagine synthetic identity getting, let's just say, auto insurance, right? Staging a fake accident with synthetic identities as passengers, and states like New York have an auto pay no matter the dollar amount, right? Now you start committing insurance fraud by submitting fake claims, but it gets better. You can get life insurance on synthetic identity. And my male husband has a $3 million life insurance policy. And I'm not sure what I'm going to do with that quite yet. Maybe it's my retirement plan. Who knows? Just kidding. But it was with the top carrier, right? And so now I have a synthetic identity who I can kill off at any point in time and use a fake doctor information, fake death certificate, whatever it might be. And now I can walk away with, $1 million, $2 million, $3 million payout, right? So the bad guys have figured out, wait a second, the banks, there's money there, right? But there's more money and less friction in insurance, healthcare, buy now, pay later, immigration, human trafficking, scamming, right? Money muling. It's so much easier to do with synthetics than it is with real people. So that's the shift that really scares me.
And I see like small businesses would very likely be targets for synthetic IDs, because if I'm running a small company and someone says, "Hey, I want to buy, 1,000 units of 1,000 widgets from you." Okay, let me see your, I want to buy them on 30-day net terms. Okay, well, here's my synthetic history of my business. I get the 1,000 widgets. I don't pay you, and I sell them all on eBay.
Yeah. I mean, it's a great segue, right? So I've been talking about synthetic identity most of this conversation, which is about the individual. But we've seen, I've been calling it synthetic entities, right? These are businesses that are essentially fake, right? And so some would say, well, that's no different than a shell company. And I'm like, well, they're a little different, at least my opinion this way. And I've been breaking this down for the last few years, but even right before COVID hit, I almost knew something was going to happen. But you have a shelf company, right, which is again a legitimate business that's been incorporated And those are used to make the business look older, right? Age the
Yeah.
business so they get more liquidity, they can get better rates and insurance, et cetera, right? Then you have the shell company, right, which was made famous by the cartels for laundering money. And shell companies are typically used for tax evasion, tax aversion, and straight out laundering, right, of illicit funds, right? Um, the concept of a synthetic entity is the business itself, as you mentioned in your example, was created specifically to commit the fraud itself, right? Not to launder it, but to commit the fraud itself. And synthetic entities exploded around PPP fraud,
Yeah.
right? And when it was easy to create a business, you incorporate yourself. It looks legitimate because you've gone through, through getting an EIN number, you Secretary of State registration, you do all these things that you do, right? Your officers, guess what, are synthetic identities as well, right? So everything's fake about it. And then you, like you said, you qualify for PPP. You go to a lender, right? And you get a business loan, right? And this is what really scares me about the synthetic entity space is it's easier to do, right? And the exposure is between 5 to 10 times higher,
Yeah.
right? Versus a consumer line versus commercial line, right? Synthetic identity credit card, I may get a $5,000 or $10,000 credit line, but if I have a synthetic entity and I get a credit card, it's $50,000 credit line, right? So, like the bad guys are now go, wait a second, it's easier and I can make a ton more money. Like, why am I playing in this space? Let's go over here, and they are, right? They are.
It makes me wonder, okay, so are people out there creating synthetic identities as to not risk themselves in trying to start up a business? Like,
Yeah,
hey, I have this legitimate business idea, but it's risky. Let me start it up as a synthetic business, so to speak, with
yeah,
synthetic IDs, run it, and if it's successful, I'll figure out how to, get it back in my name. But if it's
yeah,
not successful, it doesn't hurt me individually because it
yeah,
didn't really exist.
yeah. Yeah, and that's another great point. It kind of ties into another shift that we're seeing in the fraud space in general is around like first party fraud, right? Where you're using your information to commit fraud, right? And then you're on purpose, right? You're defrauding yourself essentially, right? That's a really interesting concept you're thinking there. Like I haven't really thought of that before. Like, yeah, why would I risk my name and my credit, even though it's you do an LLC, right? You're still kind of you can get away from that. People do a lot of they call it phoenixing, right? They
Yeah.
just create a new business under something else, and it's like restaurant business. It's famous for that, right? That was ABC Pizza Store, now it's XYZ Pizza Store. It's the same people, everything's the same except it's rebranded, right? But that's a really interesting thought. Man, I have to try that one time. Thanks, Chris. You gave me an idea.
Your synthetic family is going to start a synthetic business now.
Well, we do.
So where do you see this issue going in the future? And is the counter fraud space, the counter fraud activists moving fast enough to stay on top of it?
Yeah, again, I think the technology has really helped us. Generative AI is really going to help us look at this bad set of data, so we can go back and look at that collections data, right? That's got defaults in it. Before it was a very manual process. You had to have a data science who would write code back and forth. Now you can just literally throw it against one of the LLMs, and it'll find you the discrepancies pretty easily there. Um, where it's going for me, again, I mentioned is the ease of use, right, and its scalability, which really are what concerns me. And then we're going to take again a synthetic identity, right, which around is just data pieces right now, right? They don't have voices, they don't have faces, right? They don't have physical attributes, but they do now, right? And
Yeah.
that's what gets the next phase we're getting into is deep fakes, which is everybody's talking about deep fakes as a buzzword, blah blah blah, right? But now now you can create a deep fake to match for your identity, right? So
Yeah.
now when I want to do a liveliness check that a fraud prevention company would say, look, give me a selfie, let's go on camera and prove to me that you say you are. Okay, I'll just use my deep fake, right? It's again relatively easy to do. There are plenty of open source providers that are out there. You don't have to go on dark deep web to
Yeah.
get Worm GPT or Chat or to get a bad GPT version, right? Um, but I think government and the industry is trying to anything that's created that's a deep fake is created organically. I guess is going to have a watermark stamp on it, blah blah blah, which is great, right? Don't get me wrong, but
Yeah.
how long it will be before the bad guys just counterfeit the watermark, right? And it's not like the bad guys are using these services to create their deep fakes. They're using other services that
Yeah.
are actually much more robust, that are not regulated, and have the ability to feed off more data than we do from the good side of things. So synthetics is going to now have a face. It's not going to have a voice, and it's going to continue to I think evolve into the next phase of things, which could be something as interesting as like avatar banking, right? Now you're going in through a sim and I mean, there's Capital One has one right now, right? You walk into a virtual bank and you can transact with a virtual teller, right? So now think about this. Now I've just created my avatar, my synthetic, and I'm completely doing this, in the virtual world. There's nothing there physically. So it could get really interesting really quickly.
Yeah, amazing. So as we wrap up here, what would your advice be to consumers, small businesses, and the banking and the finance industry, let's say?
Yeah, so we'll start with consumers first. I always say this is a lot of synthetic identities are spawned off of different versions of identities, typically children's social security numbers or elderly or deceased. So
Hmm.
if you're a parent, you have a child under the 18, you probably heard this before, but please freeze their credit, right? It's a no-brainer, it doesn't cost you anything. If you have parents that are aging, like I have my parents in their late 70s or late 80s, they don't need their credit anymore, right? The houses are paid for, they'll freeze their credit because they usually have good credit score and lots of exposure out there to be used. So those are two things that I would certainly recommend, not just your children, but think about your parents as well. From the small business side, this is where it gets really scary for small businesses because they're not protected by Reg E or Reg Z,
Yeah,
which protect the consumer, right, from fraud. So when a business has a fraud issue, like the business typically has to eat it.
yeah,
And these small businesses don't have the pockets to withstand some of these losses that are out there. So, if it's too good to be true, like you said, like it's brand new, like someone wants to buy 10,000 widgets and they want to pay 30 days and, slow down, do your homework, look and see if what you're dealing with is who you really think you're dealing with, right? Um, in the past, the fraud controls where are you say who you are you really say you are, right?
yeah,
Now I tell fraud prevention people, like, your first question you should ask yourself, is this thing even real,
yeah,
right? Like, let's get that the point, and then we'll find out if they say they are who they say they are, right? But let's determine, is this thing even real first? So small businesses should do the same thing. On the banking side, I bet you the tier ones and mid levels are pretty well protected from a data perspective. They have the resources financially, technology wise, vendor wise, et cetera. And they've been attacked for the last 15, 20 years, right? So they have defenses.
yeah,
The credit unions and fintechs and small SMBs they're exposed. I mean, they're basically naked, with no sunscreen, right? And they're going to get burned. And so but they don't have the resources, right? Like and one or two synthetic losses to them could put them out of business, like legitly. So that's my advice for those belong to a consortium, right? If anybody's interested in belonging to the working group, you can reach out to me on LinkedIn. Happy to join. It's free, and we got to share the information about what's good and bad. Happy to do that for you guys. But that's kind of where we should wrap things up there as far as giving advice to those guys. And I do have one more piece of that advice. Sometimes we call it hopes and prayers,
yes,
because sometimes it's not a matter of if, it's really when. So
yeah. Steve, thank you so much for coming on the podcast today.
awesome. It was a great time, great conversation. Really appreciate it.
Thank you.